A lot of people are surprised to learn how large the global bond market is. And in this video, I'm going to talk about the global bond market, how large it is compared to the global stock market, and what that means for you as you build your portfolio. And so I'm going to share this slide with you. Actually going to make that a bit larger. But the global bond market, this is from data that I got from the Securities Industry and Financial Markets Association. As of the end of 2020, the global bond market, which includes corporate bonds as well as government bonds, is valued at over $125 trillion. That's trillion with a T. And a lot of people would be surprised to hear that the global stock market is actually smaller than the global bond market. The global stock market, with data from the same source at the end of 2020, had a value of around 100 trillion. So the global bond market is quite a bit larger than the global stock market. And going back to my previous video, the main reason for that is because government bonds make up a large part of publicly tradable fixed income instruments. And there's a few things I want you to take away from this chart. So the first thing is that the mix of bonds, from corporate bonds to government bonds, is fairly varied across the globe. So in the United States, Treasury and government-related bonds make up just over 50% of that the U.S.'s bond market. In Japan, however, Treasury and government-related bonds or government bonds make up a humongous portion of that bond market. Corporate bonds are not as huge of a component of that market. So that's the first thing, is that the complexion of each different country is very different as it relates to how their bond market is structured. The second thing, and the big takeaway for investors, is that at least in Canada, a lot of portfolios that I see are very heavily weighted in Canadian fixed income, Canadian bonds. So that's Canadian government bonds, Canadian corporate bonds. But there's a huge world of fixed income beyond Canada. So Canada, if you can see from the chart, makes up only 4% of the world capitalization of bonds. But if you go into the United States, into Europe, into Asia, you can see there's a lot more opportunity for bonds. And what does that mean for investors? That means it's more opportunities to diversify. It's different markets where you can get more positive expected future returns from fixed income, depending on how those markets are looking. So I think it's a benefit for investors to think globally when they're thinking about how to allocate their bond investments. So hopefully this video has helped give you some context around the size of the fixed income market around the world, the benefits of diversification. And as I said, there's going to be a lot of links in the description below to other videos in this series. If you like this video, give it a thumbs up, and I will speak with you soon. Take care.